All right, so quite a day today. We had a big short come in on the open, which generally shows us the direction, but that's not what we're going to talk about. Icebergs kept coming in. Icebergs are important because there's more than meets the eye there. We show a few things. We show not just how many are being traded and filled, but right here, if you look at the bottom of my screen, 90 is a number that the guy is showing in the order, and 90 is above average. So we know he's got more than meets the eye. We also know, if you've been in this business for any period of time, you should know this. Coming from the floors when I first learned it, people lean on big orders. So longs will lean on big bids. Why? Because then they could hopefully sell it to that big bid to exit their long position. If you're long, you're a seller to get out. You're leaning on that big order. And if it goes, you just hopefully sell it to that order, to that person when it was a pit, to exit your long position. You know where you're going to get out, so you know your risk. However, too many people lean on it. It creates a lot of sell pressure. So when that iceberg goes, it goes. Price goes. It goes lower. It drops. It sweeps. So number one, it's important to recognize when an iceberg comes in, how much he has, how much he's done, and what he's showing. All right. Number two, on this OPP, which is other people's positions, when it lights up green, that means people are opening up long positions. That's what I mean about the long lean. There they go. 85 even is the price the iceberg is being bid from. 85 quarter is the amount of longs that are getting in and leaning on it. You can see it down in here. And when it goes, meaning when that iceberg trades out, you're going to get a chase of sellers that miss it. Remember what makes price go down for anything? More sellers than buyers. You can't just have more sellers. You have to have more sellers than buyers, because then price has to go lower. Well, when you get a lot of longs, you get a lot of sellers. And now the chase is on. It has to be on, or price wouldn't go lower. But where does that chase come from? How could you predict that chase? How could you anticipate that chase? Because you're in the predictive business when you trade. And it's number one, seeing the iceberg, but number two, getting a feel for longs leaning up against this order. And once it goes, the chase is, anytime price goes lower, sellers are chasing it. I don't care what it's the price of, whatever. Sellers are chasing it, trying to get out of something generally. And you can even see me drawing this up and illustrating it in real time, how this then becomes subsequent resistance if it stays below it. And we continue to roll lower. Then what happened is another iceberg appeared right in here. The guy's showing 100. And let me back it up. The guy's showing 100. Well, watch what happens. Once we go down there and start trading it, he's showing 100, which is a lot. Boom. Longs get in and they're leaning on it. So you just got to be really careful getting long when you see that. And if you're bearish, this is a momentum or a breakout opportunity. And you see how the market just continued to roll lower. Now, that is longs opening up a long pretty much only for the reason that there's big buyers there. People get caught in this business. What are the institutions doing? Sometimes the institutions are buying and they're bearish because they're putting on a spread or they're hedging some short position. Whatever they're doing doesn't mean just because they're buying, they're bullish. Just because they're buying, price is going to go up. So don't think that. See and find and react, or watch how price reacts to big buying and selling, and not think institutions have to know something. All right. Sometimes that's the case. Sometimes it's not. It's the opposite. So you see big buying come in. Where'd the market go? This market dropped another 40 points from this moment within 30 minutes. What happens to, well, the institutions know, the institutions could have been trying to buy these big orders for all kinds of different reasons. The interaction and the dance with price to an order is where the opportunities and where the read is. And then you get all these little guys, all these little retail guys. You see it. We're the only ones that show open positions, but you see it come in and they, boom, they all jam in. They're all long and they become the sellers that slip it through.